Honored to be here, thank you. This is the third time I've had the privilege to participate in a conference from Ativore. First time right before COVID in 2020, and then again in 22, late 22, and now today. And certainly we look forward to the honor as the firm continues to grow of the opportunity to come back. And I have to say, applaud the Ativore folks for what we've seen, the incredible growth in stature, in personnel, and ability. Over the several years, we started working together 5 years ago, have made many investments together successfully. And over that time, it's so heartwarming to see the manner in which Ativore has established itself, first within the community here in Brazil and across Latin America, as a trusted advisor on investments, creating diversified portfolios for its clients, really being a faithful fiduciary in a thoughtful way, bringing unique American products, and that's remarkable and grateful to be part of that partnership. And I could say that within the context of our company at JSB, the manner in which we have formed a genuine partnership. We're only one of many people that they work with, but they always make us feel special, like the only ones. And we work together very closely, crafting strategy, crafting products. And I could say we have the privilege of working with institutions, working with families in various continents, so here in Latin America, Australia, Asia, Canada, in addition to the US. And there is not a better team on a pound-for-pound basis than what Roberto and Pedro have put together. Joao, I think Pedro called you the goalkeeper. We call you the striker, because you have been, in the offensive way, working with us, and that goes for Paulo and for Carolina, Maria Liche, and Rafael. And I'm leaving out names not because I mean to, but really it's applause to everyone, and you've grown so much, and we look forward to the opportunity to continue to grow together. I think I said the last time we were here, I said two things I want to improve upon the next time. First, I don't know how good the translation is from English to Portuguese, and I said I should really come back one time and speak in Portuguese. And so I bought these online tapes, and I learned after one lesson, Portuguese is a hard language, and I'm probably too old to learn it, so forgive me. The other thing, which I also wanted to do but didn't do, is to have the opportunity to speak before Pedro. Because what I realize happens is Roberto says, give us the slides a week early. So we send the slides early, and somehow Pedro then takes those slides, he puts in all of our graphs, all of our strategies. I'm sure Paul had the same problem. Now you're getting us to speak about macro, is that there's almost nothing left to speak about on the macro side. Pedro's covered it all better than we ever can. And, so we're not here at this point. What we want to do is talk to you about a little bit about who we are, and most importantly about deals. Paul was very magnanimous. He says, I'm not here to talk about Parkway. To talk about Parkview. We are absolutely here to talk about ourselves. We are here to sell you deals because this is what we do. This is all we do. This is what we love doing. Thankfully, we've had a lot of success in doing it. And in conjunction with our partnership with Ativore, we want to do that. We talk about what we do. As I think it's been mentioned a couple times, we've had the privilege in this company together, and I think one of the best things that we've done a lot of deals together, not just with Ativore here, but the team. You're going to meet my partner, Bill Grant, in a moment. Another one of our colleagues, Brock Nicholas, on the construction side. We've all been together. As young as Bill is, he was 8 years younger when we started. And having the opportunity to work with the same team, making 200, 250 investments together is something that allows us to understand each other, to be flexible, to go from asset class to asset class, because the market cycles, and there are going to be different opportunities in different times. There's a lot been said today that it could be an opportune time to invest. It very well may be, but it's not simple. And rates are going to be impactful in any class you're going to be in. And you have to be really thoughtful and mindful of what are the opportunities that the market is giving you at a particular time. We've had the benefit of just sort of by the numbers. You look at the third circle on the first line. We've bought 50,000 apartments, manage every day 30 to 35,000. We sell periodically and buy more. That gives us incredible real-time access. What's the temperature in the United States? What is it that people want? What types of asset classes? What types of debt structures? Most of our backgrounds have been from the credit side, from the banking side, where we always say you're not making enough money to lose a lot of money, and we try to bring that discipline to the equity side as well. And some of the other data, and we've been in a lot of states. I think Pedro invested in 31 states, I heard, and we have properties in 31 states, so maybe that's why the partnership works. But we've invested across office and across senior housing. But oftentimes it's different. We've been in spaces and then times to leave the spaces. Labor costs got too high. Went out of the assisted living business and the senior housing business. It's too labor-centric. We rode industrial up. Right now, we have some concerns that it's becoming oversupplied, the market. Amazon's not going to grow forever. And so we need to be nimble about how we do this. We've exited 70 deals together in full. We've exited another 50 some odd on a partial basis. Those numbers aren't reflected in this chart. The bottom right, we've had a north of a 30 IRR, but the truth is a lot of people have had good returns. We're not the only ones. And it's a lot easier when the markets are good, and Pedro touched on this, Roberto touched on this, to exit in a good way because cap rates are lower. But we never grade ourselves by, where did we exit cap rates? We're always going to grade ourselves, what's our pro forma? When we sold you in a deal, what did we tell you? Top line revenues are going to be, are we managing expenses? Is our NOI as advertised? The only way we're going to grade ourselves, because markets are going to cycle and cap rates are going to move, and I think that's what we're most proud of. Right now, a moment or two before I introduce Bill on the rationale for our investment strategy, what we have worked on for the last couple of years, sensing that the commodity multi-market is getting too competitive, cap rates on a relative basis are too low, debt's moving up, we're not getting that positive leverage, is how do we move into spaces where we're not going to be susceptible to volatile movements in the cap rate, in the interest rate space. And everything you read, and Paul touched on this, as others have, whatever you read about, it's bad news, it's a difficult time to invest, it's very retrospective. That's a complete, as we call it in the chart, lagging indicator, because if you're in an office building, as Paul said in San Francisco, you're in a really bad place because of work from home. People didn't know that. Because of rates being much higher, these are all floating rate loans. There could be crime in certain cities in the US chasing people out. That's all old news. That's not, it's important to learn from that on a go-forward basis, but that's not really where we're at now. Where the opportunity now is this could be an exceptional vintage. It may not be. You have to be extremely careful. But in many ways, it comes down to one theory. Real estate, if you distill it to one sentence, you have to achieve, and again, something that the speakers before me talked about, you need to achieve a yield on cost, which is to say an unlevered cap rate that is greater, typically 200 basis points or better, greater than the market clearing cap rate. If you do that, you're going to profit every time. If you're cutting it too close, you're being too generous in your underwriting assumptions, you're creating risk that is unacceptable in a market that gives you ample opportunity to succeed. And therefore, what we're going to talk about today are the two strategies. Pedro outlined them. When we call it build to rent or just build, in situations where we are comfortable that we're going to be, when we're stabilized in a few years out, we are going to be at a yield on cost, which is an unlevered cap rate, that is well above where the market is going to allow you to sell it. Maybe it won't be as well above as we'd like. we'll make less money, but we're not going to take risk of not having a successful investment. And we do this in two different ways. We do this with ground-up multi, where there's you heard a lot of the data, a lot of the statistics for why that's a good business. We're not going to go through all the charts, but here is one important chart. If you look at the one on the left side, there was enormous supply starting early in 22. There was very little building from 2010 to 2020, a very large gap in housing. Cap rates got very cheap, everyone started to build, and you had enormous amounts of construction starts. That's now dropped down 64%. If you look at what's happened in this quarter, it's down over 70%. As a result of that, the chart on the right, if you look at where the amount of product that's going to deliver several years hence, 26, 27, it is 50% or more or less on the delivery side. It peaked in 23, 24 is very large. It's a lot of deliveries. It's a lot of supply in different areas. People can't build right now. Land costs are too high. Construction costs are too high. Debt is high, even though it's less material of the overall amount of a construction project than one would think. But it's really hard to build. And so if you're able to build, you're going to be delivering into a vacuum. You're going to be one of the few projects delivering in 26 and 27. It takes about 2 years to build. And so how is one able to do it? And the reason we created this partnership together with Ativore is in certain deals where we're able to build because we bought the land cheaper. We're invested together now as part of the Ativore Luxembourg Fund, where we bought the land a couple of years ago. So we have no markup, a very low basis, could be 60 or 70% lower than the basis we're going to have now. We'll self-perform on building, we'll grind every subcontractor down, we're going to bond it, we're going to insure it. When we bring you the deal, Ativore brings you the deal, it's a fixed price on the construction. We have a contingency, but that's contingent on our deciding to spend more on appliances or furnishings. We're going to ensure that our rents that we're projecting are untrended. In other words, these are the rents today. If they don't change at all, no growth during the period of construction, if we lease that up at a rational pace, we're going to get to a yield on cost that is well above the market clearing. A 7.25 cap, where the markets, and we're building only in the best areas of Florida and Texas and Colorado. The markets now, even where interest rates are high, are still 5.25 cap. Even if they go up to 5.5 or 6 cap, we're still going to be making well into the teens, and more likely, if it's in the low 5s, into the 20s and 30s. And we've done this formula over and over. And to that point, I think the Ativore Investment Committee, we're going into the ground in a couple of weeks in Florida and Fort Myers, where there is supply, but we bought all this land a bunch of years ago, so it's very inexpensive, and we have the same project. We've built this building multiple times before, so our architecture costs, our soft costs are much less. We've locked up every subcontractor. You get much better pricing today than you got a year ago when there was a lot more construction activity, and we know, and there's a big hospital, otherwise we wouldn't be doing it, coming in next door. We're going to do fine with this because, and we have strong debt, fixed rate debt, and good leverage. There are projects you're going to do because this is an asset class that's in great demand. We're going to deliver in 26, sell it in 27, where there's very little new product. If you're an institutional investor, we're not competing with a lot of people at that point. And that's one of our strategies, and that's, I think, a core part of what's been spoken about. If people want to see the slides, it's there. And I think the last point I want to make is that if we're here to sell you commodity stories, we don't deserve the time today or your potential attention down the road. We are in the story business. If we can't provide to you a compelling story about a deal, build to rent, multifamily, deficits in in U.S. housing supply. I mean, that's a story, but that's fairly commoditized. What gets us really excited, and what we want to try to grab your attention with, is the story part of our business. What's in style every time, and we're going to make where we've made the most money, and hopefully we'll continue to. And I think this is what's established very much the partnership and the upside that we have with Ativore, is building one-of-one products, land that you can't get anymore, basis that you can't get anymore, partnerships with sponsors, which is to say with brands that are not available to other real estate investors easily. Irreplaceable real estate. When we talk about, we buy in the main retail strip of the most affluent zip code in the United States, there isn't any more like that. When we're building on 80 acres on the main hotel corridor in the United States, and we are the only product that's going to be large format hotel units, resort units, there's not going to be another one of those. And this is really, it's the story part that makes it compelling, because in each of these cases, and I'm going to introduce Bill in a moment, he'll speak about two of those projects, one of which is a mixed use in Naples, Florida. The other one is going to be the first Aman ranch hotel in the world that we're partnering with Aman on. In each of these cases, that yield on cost, that unlevered yield that we spoke about, is so far above a market clearing price that unless we don't execute, there is enormous profit potential. And so that's really, I think, the takeaway that we want to provide. It's that don't pay attention to us if you're not compelled by the uniqueness of the story, by the opportunity and the recognition that this is something that's highly curated, very specialized, and these are the things that we really want to share with you today. And so I'm going to ask my colleague Bill Grant to speak about two of those deals, and then we will conclude our portion of it with Brock Nicholas. And this is really the trophy signature asset of our company, which is Villatel Orlando, on 80 acres in Orlando on International Drive, adjacent to the first new theme park in Orlando in several decades. So Bill will speak about those two. Brock will spend the balance of the time talking about that. And again, thank you for coming today. Thank you for the partnership. And we cannot be grateful enough to Roberto, to Pedro, and everyone else for our partnership with Ativore.
So we're going to go from the macro to the micro of two specific stories and exciting opportunities that we are working on real time and we will be working on together with Ativore. The first opportunity is a mixed-use condo and retail development located in Naples, Florida. Both of these opportunities I'm going to touch on are that ultra-luxury segment of the market that are truly one-of-one opportunities. The Florida market has experienced a lot of the dynamics that others have touched on today in terms of in-migration for multiple reasons. Florida was always a popular destination for retirees given the weather, but also for tax reasons. The tax rate at a state level in Florida is zero. In states like New York, California, Illinois, that marginal tax rate could be upwards of 10%. Naples, within Florida, is located in the southwest, and I'll show you on a map here kind of where we sit in Naples. It is one of the wealthiest zip codes in the country, and it's mentioned in the same sentence with markets like Palm Beach, Aspen, the Hamptons. And you see on this slide right here what some condo and home prices are selling for today in Naples. It's a high barrier to entry market. It's very difficult to get approvals to build in this market. And because of that, there's limited supply. Just the other day, the most expensive home in the United States was listed for sale for $295 million in Naples, Florida. The land here is land that we've owned since 2021. We acquired with a local development partner. And for the past 2 years, we've taken the land through the approval process and gotten it to a point where we can break ground this summer. The project is going to include 50 condos, that'll be 2,200 square feet, and 75,000 square feet of ground floor retail. And this is the primary retail corridor in the wealthiest zip code in the country. So as you can imagine, the type of retailers we're talking to are national and international retailers, brands like Crate & Barrel, Lululemon, and national hospitality, food and beverage brands. On the rental side, and because we've been in this for a little bit, we've seen the continued growth of the market. When we originally acquired the land in 2021, we underwrote $1,600 per foot on the sellout price for the condos. Today, we're holding $2,100 a foot, and our local brokerage team is telling us we should hit $2,500. There's such demand for product that doesn't exist and is very difficult to build in this market. On the retail side, when we originally underwrote the deal, we underwrote $60 per foot rents on the retail. Today, in the model that you all would see, it's $85. Leases are getting inked north of $100 a foot. When we originally acquired the site, we had Whole Foods, a major, that's Amazon credit, major grocer in the United States, executed a lease for the site, and it's a large site. It has second floor space. That lease was at $30 a foot. We have since terminated the lease, and we had the ability to terminate the lease because of the growth in retail rents in the market. Our local partner recently acquired a significant amount of the retail space up and down Fifth Avenue, so we have real pricing power in a market where tenants want to be. From an economic perspective, as we sell condos, and we're going to start pre-sales this spring, we expect to return our basis in the deal just through the condo sales, and ultimately will own the best retail or some of the best retail in Florida for free. So we think there's a real arbitrage play here, and we have an appraisal. It's an appraisal, not always, we're not banking on it, but we paid $42 million for the land. The appraisal says the land is worth $84 million. So that's just reflecting the growth that I've been talking about, but we're super excited to get this one out of the ground. We have a wait list for the condos once we hit the market, and we think it's a truly irreplaceable location. With that, and here are some renderings. I should also note, we're working on both of these projects with premier architects in the United States. In this case, it's a group called Morris Adjmi. So really beautiful designs here. The next project I'll touch on, also ultra luxury, in this case, a hospitality development. And some of you may be familiar with the Aman brand. They don't have any properties in South America today, but they're in expansion mode, and that could change in the coming years. The brand started in Asia in the 90s, spread through Europe, and they've recently been in expansion mode in North America. This is truly the ultra luxury segment of hospitality. Room nights average 2,500, north of 3,000 regularly at their properties. And the only reason we're here talking about this is because we acquired one of the other Amans in North America, in this case in Jackson Hole, a few years ago. And through our ownership of that asset, we were introduced to the local developer of this asset. The development is going to be in a market called Hill Country, which is a second home market in Texas. It's about 75 miles outside of Austin in driving distance, but within driving distance to Dallas and Houston. And it's located on a 1,000-acre site, 4 million square meters. We're going to build 58 guest rooms, and there are also going to be 48 lots that will be developed as branded residences. Just to give you a sense of what this property looks like, and I think this is the best comp. This is if you pull up to book a room at Amangiri, this is probably the most exclusive resort in the country, one of the most profitable in the world. With 35 rooms, it does about $25 million of EBITDA. And it's just become a destination for celebrities, influencers, and when you want to go on the trip with your wife and spend $4,000 a night, this is where people go. But right now, if you go to book, those are the prices, and this is what we're modeling our property off of. Amangiri is located pretty much four hours from civilization. The guests at Amman's value privacy, their wellness, and it's a real getaway. We think our property in Austin, where we're still in hill country, we're not an infill product like some other Ammans that are being built today, but we kind of get the best of both worlds being near Austin. The property itself, we plan on closing on the land later this spring and starting to build out a sales center, at which time we'll commence sales on the lots. And for the lots, we're selling branded residences. Folks will come, they'll buy the lots, they'll build their own homes, but within the specifications designed by our architectural team at Olsen Kundig, again, premier architect for this type of product. Once we begin the pre-sales, we expect to commence construction the middle of next year. So it's another example of selling a piece of the project to bring our basis down and then ultimately own what's going to be one of the premier hotels in the country. We're underwriting average nightly rates of $2,500. Now, compare that to the Amangiri. We think there's a lot of room to run. We're holding 25, and the deal works incredibly well. If we hit over 3,000 or 3,500, it's going to be a really special deal. I should note on a net basis, we will be in the hotel for about $1.1 million per unit, per key. The Amangiri just did a recapitalization at a value of $6 million a key. So we think there's significant upside. It's super unique, and it's a segment of the market we really, really like, and it's if you look at ADRs over the past 25 years in the segment of the market over $750 a night, the average growth rate has been 7% a year versus 3% for the rest of the market. So there's a segment of the market that values this type of product, and we think this is going to fit really nicely with Amman's North America expansion plans. They recently opened a property in New York. They're building one in Miami. Just last week, they launched sales for the branded residence at the property they're building in Beverly Hills. I found out last night 10% are already under contract. So the brand recognition continues to grow, and we're super excited about this one as well. So those are just two examples of unique, ultra-luxury properties that I'm working on every day. And with that, I'll turn it over.
Bom, agora nós temos a apresentação do Brock Nicholas. Brock, ele atuou como presidente da divisão da Flórida da Lennar, que é a segunda maior construtora nos Estados Unidos, que já construiu mais de 1 milhão de residências. O Brock, ele já construiu mais de 20 mil casas familiares e mais de 5 mil vacation homes. Ele é uma referência no mercado de vacation home nos Estados Unidos. Se você tem ou tem amigos que comprou alguma casa em Orlando, provavelmente o Brock é que construiu. Das 5 mil casas em Orlando, ele tinha até quiosques em São Paulo, Rio e Belo Horizonte, e vendeu aí cerca de 3 mil para brasileiros. E ele idealizou todo o projeto iDrive, que muitos de vocês conhecem. É um projeto que começou em 2017, e ele vai falar em detalhes sobre esse projeto. É um projeto que eu fui lá 7 vezes, que nós chamamos de Trophy Asset. Então, por favor, Brock.
Check, 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 check. Can you hear me there? Bom dia. This was Bill's first trip to São Paulo and to Brazil. And unlike Jay, we did teach him a couple of Portuguese words, but his favorite, cachaça. So welcome to Brazil, Bill. I'm here to tell you a little bit about iDrive, and many of you have heard this before. First, I want to get into who Baseline is, and then we'll go through the project, we'll hit the high points, and then we'll get you to lunch. So Baseline. Baseline's experience and capabilities is in investment in real estate. We're very, very specifically involved in vacation rentals, residential development, and all of the vertical natures in getting those financed and constructed. We actually have operations in Colorado, North Carolina, Tennessee. We've got deals in Alabama. But really, where we make our bread and butter is in Orlando. How many of you have been to Orlando? Very small group? I doubt it. I doubt it. Orlando is my hometown now. I've built more homes in Orlando than almost anybody else. And so we developed a trade base there. We have a massive footprint in Orlando. We have several deals going. And the International Drive project is our focus every single day. We have 90,000 square feet of space all around the Orlando area supporting this project. And we have about 100 employees that are focused on both the distribution, the construction, the development, and the management of this asset. And we're a vertically integrated group in the city of Orlando, so the largest tourist destination in the United States. So what is the opportunity here? Villatel Orlando, or iDrive Orlando, I think, as you know it, is a master planned residential community, a build-to-rent community, with a highly special and unique approval that allows us to rent the homes as short as 2 nights and as long as 1 year in duration. The average length of stay for a vacation home renter in Orlando is 1 week. It's predominantly a domestic market, and as we'll get through the presentation later, you never want to bet against the American consumer. It's a very powerful market for this. So a bit about the deal. First of all, we have several theses and overviews that we want to focus on. It's an A-plus location. International Drive is the most concentrated and highest occupancy hotel market in the country. There are 50,000 hotel rooms within a short distance of our project. We are on International Drive, have frontage there, and there are 50,000 cars a day traveling past our front gate. 50,000 cars a day. Of the 50,000 hotel rooms in our submarket, we can identify less than 300 of those hotel rooms that are 2-bedroom format or larger. Now let's do some math here. There's about 1.5 million people a week coming through this market. About 1.5 million people a week. There's 50,000 hotel rooms servicing this group. About half of those 1.5 million people a week are family travelers or groups. There's only 300 large format rooms to stay on iDrive. That means every single family that visits Orlando to stay in a vacation home has to be way out west in the Kissimmee submarket near Disney. It's about an hour one direction from Universal Orlando and the new Epic Universe Park. Epic Universe will open in the summer of 2025. They're starting to advertise into the market. You may have seen some of this. This is what they call a dry park. The gate attendance at Universal Orlando's dry park averages between 15 and 25 million travelers per year. Let me just say that again. One park at Universal Orlando will do between 15 and 25 million U.S. travelers with about 15% international. Big, big numbers. By comparison, Disney does about 55 million per year. Universal is coming for Disney in Orlando. And this park doubles their current capacity, where they do about 25 million travelers per year. We, in our location, have no competitors. you have to get an hour west of us to stay in large format luxury vacation homes. You will not find a competitor. It's impossible to get this land approval. I bought this land in 2017 as president of Lennar Homes in Central Florida. This is a very, very interesting fight. The city of Orlando has never allowed a short-term rental project to be approved, and they have never allowed a residential product to be built on International Drive. It's the first of its kind, and it's the first of its kind in the United States. And we think it's a special opportunity for you to participate and own a piece of what Orlando knows is special. One of the very interesting things about what's happening here is you're getting the benefit of development returns without any of the usual assumption risk of a development deal. I just want to be clear here. This job started in 2017. We stepped into it in 2021, and as we sit here today, we're booking over $160,000 a week in booking pace for new business. We are open already. There is no development risk left on this project, despite that it is a development deal. These are pictures of the project as of this month. You can see we've got a good number of homes completed. Nearly 200 of these large format homes are already built and on their way to becoming in service so that happy families can come stay with us. We also have multiple paths to exit. Oh, we're on an old slide deck here, Carolina. Late night stuff. We also have multiple paths to exit, and as Roberto would tell you, at an NOI of approaching $50 million per year, at a very conservative $550 average rate and 70 to 75% occupancy, this project can be taken out like any other big investment banking project. Sovereign wealth funds, REITs in the hospitality space, REITs in the BTR space, and of course all the typical SFR aggregators as well. So make no mistake about it, these are not renderings, this is the real project. Let me give you a bit about the development process. Processes, risks, returns. The GC structure is very interesting here. You see, I bought this project as president of Lennar Homes, and we went back to my old employer after I left Lennar Homes, and we bought it back from them. We have a very interesting financing structure in that we take no construction financing risk on the job. Lennar carries our construction financing. We mostly move the homes onto our balance sheet when they're occupancy ready. Our team moves in with the vertical integration, and we completely build out the interiors. It takes between 45 and 60 days. At the end of that process, they are rental ready. We are photographing the homes, and we're putting families in a short distance after. It's a very unique process. Pretty low leverage on the deal, 58%, but none of the bank has the collateral until all the rooms are ready to go. Very unique structure. Very unique structure. We control the subcontractor base. Why is that? Well, I developed the subcontractor base in Orlando. This is a very unique advantage. Any investor that gets in this deal with us becomes a part of my team. If you are building residential construction in Orlando, you're going to want to be on my team. This is an advantage for all investors. These pictures are some of the interior images of our completed homes. We have theme rooms. You can see that the theme rooms are quite detailed. If your children come stay with us, you will not be allowed to stay anywhere else next year. They will definitely tell you to rebook Villatel Orlando. So we have, I mentioned the loan facility. It's a rolling construction type of project. Our project will be completed in the middle of 2025 as well, coincidentally, when Epic Universe opens its doors. We believe that due to the nature of Epic Universe and how these markets work, the highest attendance year at Epic Universe will be the 12 months after the first year of opening. We believe 2026 will be very, very big for Orlando. Remember, don't bet against the American traveler. Don't bet against the American consumer. I've heard talks about hospitality exposure. Americans will go into debt to travel and take vacations. It's true here. The mouse is a very powerful incentive, and Universal is coming after the mouse. These are facts. Very resilient market. In the last 40 years, Orlando's gone backwards year over year, I think twice. 9/11, COVID. Those are the only 2 years they went backwards year over year. It's a very interesting place. So for those already in our project, I just want to say, estoy honorado. Obrigado. But the work is not done. We've raised 130 million US in equity. That is in the deal. A project like this is very low leverage, but because we don't put any of the collateral on the bank's books until we are done and funded, it's a very upfront heavy and capital intense project. We want that last 70 million of equity to be committed. We're not going to call it all now, but a nice steady schedule of 5 to 7 million of equity per month from here through the end of the project would be just great if I were putting the order form together. So we appreciate very much your participation with us and putting your trust in Baseline and JSB. We look forward to hosting you also in Orlando, my hometown. And I look forward to seeing the Q&A with Roberto. Thank you so much.